This conference will now be recorded.
All right, so today we're going to provide an update on the recently released HHS reporting requirements regarding the provider relief funds, as well as an interactive demonstration of our relief fund reporting worksheet, which we do anticipate being helpful to many of you. And again, we'll have that posted online as well. So with that, I'll hand it over to Mike to get us started. Mike.
Great, thanks, Jason. Okay, so a little caveat before we get into this, as we've sort of laid all this out, I don't think there's any question that everything we're going to present to you today, I would put under the category of tentative. The HHS guidance that's there kind of drifts between very specific and totally open-ended. And so as the FAQs keep coming out, and as we pose some of our own FAQs, or we get those from you guys, we'll need to continue to report on this. So I would suggest that this is not the last time we're going to end up having this discussion with everybody and walking through this. There's as you'll see when we go through here, a lot of these are just going to raise more questions than answers, and we're going to have to get back. All right, so the point of this is that we're going to, as Jason said, we're going to walk through what we know about the reporting requirements as they exist now, give you some thoughts about some open-ended questions that we think are still have to be clarified, and maybe some ways of kind of thinking about it. But if there was one point, if you want to ditch on this in the middle of it, if there's one point that I think needs to be heard, is that if I were you guys, at the end of this, it would be to take a crack at projecting out where you actually are and trying to determine where you are in this and whether or not you're sitting on a payback or not. It's a serious issue, and I'm sure y'all saw the other day that HCA chose to return the entire $6 billion that they got because they didn't believe that they could justify the use of those funds by the change in their bottom line, which apparently wasn't very significant. Therefore, obviously, that sets a precedence that we need to think about. All right, so with the slide that's showing here, the reporting requirements, who is required to report? Basically everybody that got more than $10,000 from all of the various phases of the general distributions. There was the Medicare round, there was the net patient revenue round, there was the phase 3 of it, which kind of caught everybody else that really hadn't gotten anything. Some of the community service boards were in that, the Medicaid-based providers were in that, and then beyond that, there were the targeted distributions for the rural hospitals, the safety net hospitals, the hospitals that had lots and lots of COVID patients, and then there was the Medicaid provider distribution. And so if out of all of that combined, you got more than $10,000, then this is for you. As a reminder, just remember that the terms and conditions that they reference throughout all of this are that the recipients are agreeing that those funds are only going to be used to prevent, prepare for, and respond to COVID, and that only those healthcare related expenses or lost revenues should be attributable to all this. And so that kind of thought process and phrasing goes throughout all the rest of the document here. Next slide, Aaron. All right, so the few hunks of revenue that don't have to be excluded or included in the justification here are the nursing home infection control, the rural health clinic testing, and then the HRSA money that came early on related to COVID supplies. That is not part of the dollars you're attempting to justify at this point. Those can be excluded from the program. Next slide. In looking at some key dates, the reporting system is supposed to open around January the 1st. Now it says January 15th. But the first reporting from you guys is due based on the expenses and the lost revenue calculations that we're about to talk about through 12/31, and the reporting is due through their portal by 2/15. If there are remaining dollars that have not been justified, then there's a second crack at it that you can file from January to June 21 activity by July 31st, 2021. And so the portals are not open. Originally, they said the portal would open 10/1. Now the new guidance is saying that it would be open in January. And so that's disappointing as well, because obviously getting to see the very specific nature of what they're asking for when the portal opens also provides a lot of definition to how to help with this. Next slide. All right, so the basic theory here is that you're taking the applicable provider relief funds that you got from the prior slide, all those various pieces, and you're trying to justify them through either expenses attributable to the virus, which they have broken down into two parts, general administrative kind of expenses and healthcare related stuff. And we're going to talk a lot of detail about that in just a second. And then whatever's after that drops down to being justified through a lost revenue calculation, which we'll also talk about here in just a second. So anyway, the other point with this is that it doesn't specifically link things like PPP forgiveness and say that it's directly offset in the formula. However, it does have a blanket statement that the PRF payments, the provider relief fund payments, cannot be used to reimburse expenses that have already been reimbursed from other sources, patients, other governmental funding that's come, et cetera, et cetera. And so we'll need to think about that. And that information is certainly requested is in the data request that we'll cover here in just a second. Next slide. Some basic information that you'll need for the portal when it opens. You see your TIN, the NPI, your fiscal year end, federal tax classification. Now that said, regardless of what your fiscal year end is, the data we're about to talk about, expense and net revenue and lost revenue wise, is going to be asked for on a calendar year, calendar quarter basis. And so for these purposes, doesn't so much matter what your fiscal year end is, you're going to report it on calendar quarter, calendar year. And so an additional non-financial information, the employees that you have, total rehires, we'll get into the specifics of that when Janie shows the tool. Patient volume, there's patient statistics, visits, telemedicine visits, inpatient admissions, those kinds of things are asked for. And then a lot of information regarding, for hospitals at least, for setup and staff beds and capacity type information for those kind of providers. Next slide. All right, so in kind of delving into the expenses, again, it's those same two types of expenses. They're the overriding theory of what an attributable expense is that it meets one of these three definitions. It's either treating confirmed or suspected cases, preparing for possible or actual cases, or this third one, which seems to be very broadly based to me, maintaining healthcare delivery capacity, which the first two can be fairly specific. The third one seems very open-ended to me, and certainly I feel like that's going to have to be qualified in some future FAQ around all that. But we'll talk to some specifics of that in just a second. Like I was saying a minute ago, expenses attributable to the virus cannot be reimbursed by another source, be it the insurance or other governmental agencies. If you got more than 500,000 in PRF funding, which the hospitals, CSBs likely did, a lot of you guys practices on the phone probably did not. If you got more than 500,000, then there's another level of detail in the data that'll be required related to the various types of expenses that you see there below. And in Janie's tool, when we transition to talk through that, she'll show you kind of the detail of those that are applicable. Go to the next slide. Okay, so when we get into the specific types of expenses, as I was saying a minute ago, some of these feel pretty specific to me, and some of them feel pretty open-ended. Like general administrative expenses, it says that mortgage and rent payments can apply. However, under the definition that you're either preventing or treating virus patients or preparing for it, I guess the question would be what would qualify for that if your existing structure already exists, and whether or not you make an argument that a portion or all of a particular structure is related to COVID in particular. I get it if you're a hospital and had to rent a mobile unit to treat patients or had workarounds that forced you to do something like that. Otherwise, I'm not entirely sure what would fall into that. Insurance, premiums paid for property, malpractice, business insurance, those kinds of things relevant to operations, however, also relevant to COVID. And so, again, not 100% sure if it's not an incremental unit out there, what that would be. But again, I think that's part of what needs to be clarified. Personnel, workforce related actual expenses to prevent, prepare for, respond to the coronavirus. That one seems more obvious, as workforce training, staffing, the temp checks up front, all those kinds of things that you have your personnel doing. I think thinking about how you hard code how to capture that time is going to be very key to you guys, and understanding how to on the fly throughout the year, the remainder of this year, determining what is COVID related, not just incremental COVID, because it may not be an incremental expense, but it may be attributable if it's staffing that is normally working, but you have them somehow deployed in a capacity that's related to COVID response, then that time is going to need to be captured. I fear for you tremendously trying to look at this at the end of the period going backwards. And so I would strongly encourage you to figure out a way to how to hard code that into your ongoing accounting for it. And we'll talk more about that in a minute as well. Fringe benefits, extra benefits are supplying. There's a lot of you guys have hazard pay that you're incurring right now, travel reimbursement, employee health insurance, any other kind of things like that related to either incremental staffing, COVID attributable staffing. I think you can make an argument that if 20% of your staffing is applicable in the first place, then 20% of the fringe benefits ought to be applicable as well, those kinds of things, and thinking about some allocated costs like that. Lease payments, new equipment, software leases, other facility related costs that is COVID related. Certainly any of the testing equipment and stuff like that, and software leases that go with that would be applicable. Utilities and operations, several of y'all have had to do ventilation reviews, additional cleaning, lots of additional cleaning, additional third-party services not captured up in personnel, but are incremental cost or attributable cost to your reaction to the virus in the first place, and not just treating the patients, but preparing for it as well. And then the last one's kind of a catch-all, just anything else not captured otherwise that is attributable to the virus. I think it leaves it open for you guys to think through your income statement and get creative around what really is attributable to the virus in the first place, and at least consider those kind of expenses. Next slide. All right, so moving from the general admin expenses to specific healthcare related stuff, again, it's this curious blend of very specific stuff and very open-ended stuff. The supplies, that seems really straightforward to me. Supplies to prevent, prepare for, respond to the virus, the PPE, the hand sand, all those kind of supplies for patient screening are obviously part of this. And again, from y'all's perspective, it's a matter of being very good about being able to track that over time, and not just trying to look at it in retrospect several months down the line. Equipment, specific equipment that's same thing, prevent, prepare for, respond to the virus, ventilators, HVAC, systems, those kinds of things are obvious. Other expensive, other equipment investments that you'd have to think about whether or not it's either expanding capacity that we'll talk about in just a second, or specifically virus related that somehow can be tied to being an expenditure of the PRF in the first place. The next one, the facilities cost related to same three categories: lease or purchase of permanent structures, modifying a current structure, having to adjust the HVAC on a particular wing, those kinds of things, the cost of transitioning an ICU to a COVID unit, all those kinds of things would be applicable. And then the last section there, just again, the catch-all from a healthcare related expenses, just anything else that's out there. So next slide, a couple other points around this, that it's, as it relates to the healthcare attributed, so it's expenses attributable to the virus that can be incurred through direct patient care, overhead activities, the preparation for possible or actual COVID cases, or the last one, maintaining or expanding healthcare delivery capacity, including operating and maintaining facilities, a la lease, purchase of new structures, modification of structures to accommodate revised treatment practices. And so it gets into, you know, and we'll talk again in just a second about it, anything else that has been done in order to expand access to care or to maintain or expand capacity for care during the pandemic, it seems like it leaves it open-ended for those to apply. And so we've already had questions from you guys about if my roof over a particular unit is at risk, and that can become a capacity issue if I don't deal with that, can I repair the roof or add a new roof, and can that apply to the PRF? I think you can make a case that that would be true if you can hook that there is an imminent potential adjustment to capacity for services if that's not dealt with. And so if it's been like that for 20 years and we don't think there's any reason that it's going to impact capacity over the next period of time, then maybe it's not applicable. But if you can make a link to it and then sort of document that that's the case, it seems like it leaves it open-ended for that type of stuff to be applicable. There are some salary limitations. They will not allow the payment of an executive greater than $179,000 a year, and it's for purposes of it, it's direct salary exclusive of fringe benefits. And so those kind of limitations apply as well as you start to, you know, I don't see 100% of the CEO being applicable to coronavirus anyway. So, but that kind of limit is in there. Next one. If I was kind of boiling down this section into just a few questions, you know, that we either have or kind of notes, my first one would be the same thing I was saying a minute ago. I think you have to consider hardwiring the ongoing capture of the expenses. I may have mentioned to several of you individually prior to this that we have some departments or some providers who have set up a COVID department on their financials, and they're taking all the cost from individual departments and they're shifting them over to COVID department in order to capture them on an ongoing basis. We have other providers who, you know how in each department there is a sub account for salaries and supplies, medical supplies versus non-medical supplies, all those kinds of things, that they set up a sub account under each department in order to capture COVID attributable expenses. And then there's others who have, and I think this is a great idea, in the payroll system where we're capturing regular time versus vacation versus preceptor versus, you know, training versus what have you, to add COVID as a payroll category such that we can capture the time there on an ongoing basis. And again, whatever definition you end up with that meets the attributable definition, to start shifting that time over there such that you can support the reporting for it later on when it comes down to it. Again, I fear for you guys greatly, you know, the practices that are on QuickBooks, for example, having to go back at the end of the year, having done nothing ahead of time, and to try to go back and support it in a manner that's going to be, you know, meet the requirements. This seems difficult to me. The next point, healthcare related expenses attributable is just broadly defined in general. I think you guys need to think carefully through those that are either incremental or that it's somehow related to COVID definition situation, and not just very specific to temp check people. And I think if you think about all of the workarounds and all of the different inefficiencies that have embedded our organizations in order to deal with this, that it's going to be more than just the obvious. And I think we need to think about all the categories of expenses and the various things that might be applicable. The next point, it's maintaining, expanding delivery capacity, also very broadly defined. I think this is going to have to get clarified, but for right now, it's things, it would seem like it's open for, if I reconfigure the front desk and I have some investment cost into improved patient flow in my practice, it seems like it leaves it open-ended for that to be an applicable cost. If I could fix the roof like I was talking about before, if that impacts capacity, then that seems applicable. Upgrading IT software to improve flow, efficiency, capacity, those kinds of things seem like they're under an attributable definition for right now while we wait for more FAQ to get clarified. As I was saying earlier, if I were you guys, we have until June 30th of 2021 to justify the funds that we received. Projecting the expenses plus the lost revenues, which we'll talk about in just a second, all the way out to June 30th to verify that you're maximizing the amount that's justifiable, and understanding that, and then backing in from that into any kind of capacity type investments that might be applicable would be part of the thought process if I were you guys. All right, so shifting from there over to the lost revenue section. So move on to the next one. Yeah. All right, so the definition of lost revenues is a negative change in year-over-year net patient care operating income, which they then define as patient care revenue less patient care related expenses. Net of the expenses that you would have identified in the first section up above. And so again, the way it's really working is that you have the PRF funds that you're attempting to justify, you have the directly attributable related expenses, and then whatever is left over is dropping down into being justified through this lost revenue definition that we're about to talk about. Now, that said, one of the kind of key things as we walk through this in just a second, and I think this, Janie and I have gone round and round about this, and I think it's going to have to be further defined. It seems like there are 3 different sets of numbers that are applicable here. One is actual net revenue, and you'll see the definition of it by payer in a minute as quote unquote net charges, and it defines it as net charges received. So there's that, which seems like it is net revenue as we talk about it from a provider perspective, or if you're in a practice, it would be collections if you're on a cash basis. The second one is that number essentially minus direct patient care related expenses, which gets at the definition up above. They're the net patient care operating income. And so there's net revenue, then there's the net operating income, and then there's the quote unquote net gain. And so that feels like it's kind of bottom line based. And so I don't want to get everybody confused. And we're going to cover those 3 again in just a second. But the point being, you're going to end up having to report all 3, and that it's the net patient care operating income versus net gain that's going to define what you can claim when this is all said and done. So I know that was confusing, and I'll hit some more slides on that in just a second. The other, you're also going to have to report other COVID assistance that was received, paycheck program, whatever else you got from the CARES Act, testing funds, any business interruption insurance proceeds, all those kinds of things are required to be reported as well. It does, as I was saying before, it doesn't give you a very prescriptive formula that then says all that stuff's going to be taken out of the expenses. It does just make the general statement that expenses that are not, the expenses that are claimable are ones that are not offset by other assistance that's been received. Next slide. All right, and a busy slide, and I apologize for that. As I was saying before, lost revenues are the negative change in net patient care operating income. And so it's, and then net of the expenses that we would have been, have taken out already. This is a real departure for HHS. Previously, the definitions and in the FAQ, it really hadn't been clarified to be much more prescriptive than this. There were very flexible definitions in the past. This is the most prescriptive version that we've seen. So as it breaks down into what you have to report, that next bullet there, on a quarterly basis, it asks you to report the revenue or net charges from patient care prior to netting with expenses. So before those direct expenses that we were talking about a minute ago. So on 19 versus 20 on a quarterly basis, through calendar year 2020, fourth quarter calendar year. And then you'll see in just a second that if you have funds left over, you'll report for the first half of 2021 as well. So the recipients, you guys may apply the PRF payments or the relief fund payments toward lost revenue up to the amount of your 2019 gain from healthcare related sources. So what that's saying is, or at least my interpretation of that, it's lost revenue is the year-over-year change in net revenue capped by the change in bottom line year over year. They need to clarify that, and I'll show you an example in just a second. But like if my change in lost revenue is $1 million and my change of bottom line year over year is only 500,000, it seems to cap you as if 500,000 will be applicable to offsetting the provider relief funds that you've gotten. The one caveat to that is the next bullet point, which is to say that if you lost money in the base year 2019, then what it seems to say is that your lost revenues can keep applying until you get back up to zero bottom line in this year. So if I lost $1 million last year and my change was only 500,000, I still can keep claiming the change in lost revenue all the way back up to where my bottom line was zero. So it allows you to claim more lost revenue than just the change year over year if you lost money in 2019. Next slide. As I was saying before, 2021, you get the chance to second bite at the apple. And so if you do report 2021, then you're reporting the expenses like we were talking about before for January through June and have to report it by July. But if you report that, if you push out to 2021, then you're comparing January to June net or lost revenue under their definition back to the first half of 2019. So everything is going to be pushed back against the baseline. The 2019 is the baseline. And so, you know, if it's 19 versus 20 lost revenue for the first part of it, year versus year, if you push into 21, it's the first half of 21 versus the first half of 19 for that. Again, I'll show you an example on that in just a second. HHS is defining patient care to be healthcare services and supports. It's supposed to not include insurance, retail, real estate, those kinds of things. If the hospital or if you know, one of the other entities has a separate real estate venture, it's not supposed to include that. So if you're a physician and you own your own building, the profit and loss for that is not part of this. It would just be the patient-related services. Also, grants or tuition are to be excluded as well. And so that said, in the writing of it, the point seems to suggest that revenues that were potentially impacted by volume adjustments are applicable. So even if it's called a grant, it kind of leaves it open. If it's a patient-related grant that somehow you got paid less for in this year, year over year, then it seems like it can be applicable as well. Then that last bullet point, you're going to have to report essentially by payer, by quarter, by payer, the amount of net revenues. And it says net of uncollectible patient bad debts, essentially. That's if you're on an accrual basis. It doesn't define in here accounting methodology one way or the other. So it seems to me that it's implying that whatever accounting methodology you're on currently, either cash basis or accrual basis, that's the methodology you're using to lay in your actual revenues by payer there. Next slide. All right, in walking through a couple of examples that might get a little confusing, but the example one there, what I'm trying to do is kind of show you quarter by quarter, here's what you're going to have to report, and then looking at the change in bottom line and what might be applicable to go against the PRF to offset it. So in example one there, if you look at the net patient revenue less patient care expenses, the 19 versus 20, this particular provider lost $175,000 in lost revenue. Their net change in bottom line year over year is $235,000 less. Therefore, they can claim the entirety of their lost revenue change of 175. They can't change, they cannot claim the full 235 change in bottom line. They can claim the 175 change in their lost revenue. Example number two there, in the instance that it goes the other way and they, same as the first example, the change in lost revenue is 175. The change in bottom line or net gain from healthcare related sources is 135,000. Therefore, in that example, they would be able to claim just $135,000 as offset to the PRF funds. And then the example on the third one is if the entity was losing money already, then the fact that their change in bottom line is only 105,000 would not impact the fact that they lost 145,000 in the first year. Therefore, they could claim 105 plus 145, and because their change in lost revenue was only 175, they can claim the full amount of that. So, and then I won't talk about the 2021 part, but it's the same concept pushed in 2021, just comparing those two quarters in 2021 to the first two quarters in 2019. And again, I know that's confusing, and so call us later on if I've blown you away. Next slide. Just some kind of summary thoughts around this. Definitely need a definition. There's, as I was mentioning before, they're going to have to clarify what is net gain versus net patient operating income. And so that point's not on there, but it's net gain feels like it's bottom line. If you're a hospital, I would expect that virtually everything you're doing is healthcare related. And so net gain feels like it should be bottom line unless you're, doing real estate ventures, stuff like that off to the side. But they're going to need to clarify that in the FAQ. And then the patient operating income, what is a direct expense that goes against that revenue and what is not a direct expense, I think needs some more definition. I think you could come up with your own definition of what is a direct patient care expense, but there's obviously going to be a large gray area in there. Is the medical records department patient care related? Well, it's got a role to play. It doesn't directly touch patients. And so, is that applicable in that definition or not? And I think that's got to be clarified. Now, the points that are here, revenue definition by quarter, calendar year, regardless of provider fiscal year. And so again, don't get caught up on where your fiscal year is. It's going to be calendar quarters, calendar year, regardless of. Net patient care operating income or net charges doesn't define an accounting methodology. And so my suspicion is that it's based on your current provider accounting methodology. But again, we're gonna need an FAQ to clarify that point as well. As we were talking about before, if the full amount of HHS funds or the PRF are not quote unquote justified by the initial reporting, then the lost revenue pieces for 2021, the first half of 2021 versus 2019 would be applicable when you file the second time later on. Then the other point that I think it's interesting, it doesn't really define what's the point of them asking for the statistics, all that kind of stuff. But it seems to me logically that you're going to have to make sure that the change in the statistics makes sense versus the change in lost revenue or the lost revenue calculation. Because if you throw in statistics that make it look like you're seeing the same number of patients and your lost revenue suggests that you're down 20, 25, 30%, then it just seems like you're going to have to either recon that or somehow be able to explain that if those two don't match. And so I would carefully look at those to make sure that they make sense against each other. Okay, so before we kind of shift over, the kind of last thing here, go down one more slide and then we'll hand it off to Janie. If you got more than $750,000, I don't know if you guys are, are entities that have to get a single audit currently. If you got more than $750,000, you were supposed to go get a single audit. And so it meet those requirements. You see the regulatory reference there. But the auditors, you'd need to work through that with your auditors and get a single audit report that supports that. From their perspective, I think it upped the ante tremendously in having to have it audited. Now, that said, I don't know how you audit in retrospect for whether or not somebody was temp checking or not 6 months ago. And so I think that's got a lot of definition that's going to have to come to bear as well for their audit requirements as whoever you'd select goes through our books around all that. And so that it seems to be that there's going to have to be some work done on that as well. All right. with that, let me switch over to Janie, and we'll come back, Aaron, to the upcoming webinar slide at the end.
Mike, before we get going too far, there are a couple of questions in the chat if you wanted to answer those.
Yes. All right. First question: if you make a decision to expend funds that currently fall under broad maintain care, healthcare capacity, and it's later clarified to make the expense now not allowed, do you think that'll be a problem? I think that yeah, I do think it'll be a problem. I think that it's an open-ended issue right now, and I think if you make investments in those things and claim them, I don't see that there's a penalty defined for that currently, but it does seem like that it wouldn't be claimable at that point if they somehow future, decide that they want to get very prescriptive on that. I don't think they're going to say if you thought it was under the definition at the time and then we clarified it later on, you get to claim it anyway and grandfather some of that stuff in. I don't see that happening. And then next question is, are we going to have to convert from accrual to cash accounting for net revenue? I don't think so. I think they're going to clarify that whatever accounting methodology you're under right now is how they want you to report it. So, but again, as soon as that comes out and we have clarification around all that, we'll shoot that out to everybody. I think that would be a massive pain in the butt for all of you on accrual basis to have to go back and convert that on a payer by payer basis. So I don't think that's their intention for right now. Next one, does supply expenses need to be precise, such as invoice by invoice basis, or can it be last year we used X number of gowns, but this year at the same time we use X plus Y gowns? I think their intention is to make it as specific as possible, and that if it were possible on an invoice by invoice basis for things that are truly incremental or truly specific, like entirely specific to virus response. On the other hand, there are way too many categories of expenses that some kind of allocation methodology just wouldn't be applicable for. How do you figure out that, what portion of your staff's health insurance should apply when 20% of their time is related to response, to COVID response? I don't see how it gets around having to have some kind of allocation methodologies embedded in there for a lot of types of expenses, not just the sort of the increment for gowns. Because again, I totally agree. There's no way you can go through the specific daily use of gowns and gloves and all those kind of supplies and be able to say that was related to the response, that was not. I think you're going to have to come up with some kind of a allocation methodology for that, using a baseline number and then that into a higher number the next year. I think is one methodology. I think there are probably other more aggressive methodologies as well that could be thought of. Okay, so that's it for that. Janie, you want to take over and walk through the tool?
Absolutely. Good afternoon, everyone. Hopefully everyone can see the screen and it's not an eye chart. We'll try to get it. I don't know that I can get it much bigger because then I can't really navigate it on my side. There's two tabs to this document, and as like the PowerPoint presentation, it will be made available. And the difference between the two documents is that this first tab is a detail of the data needs, and those are related to these various hyperlinks where HHS is actually specifying what information they're going to require you to report. So the first page is the first hyperlink is a 6-page detail. The second is a 2-page kind of quick reference that actually sends you back to the 6th page, and then there's a quick fact sheet on those. I won't read through every single one of these. Many of them are items that have already been covered in the PowerPoint, but the various categories of information that we're looking at. So the demographic information, the expenses that are related to COVID, our lost revenue, and the additional non-financial data, and then a documentation of filing what your single audit status is and if that's applicable to you. And then each of the callouts are specific text from the documentation that is available through HHS to specify what's related to that. I've taken that and blown it out to this kind of data input tab. And the goal here is really to help you track quarter by quarter the various data elements. Some of the data has to be reported on a biannual basis, so that if we push into 2021, we're really looking at the entire 6 months to 6 months. But since we're going to have to capture the quarter by quarter information anyway, just seems easier to me to document it that way. I've grayed out the sections where I'm not expecting you to have to track information, and so the blue sections are where we would expect that you would be populating that. And then there's some expansion or grouping buttons on the side just so that you can look at things or hide things, because it does get to be a bit of a busy worksheet. So just starting from the top down, the first two categories are the general administrative expenses and the healthcare related expenses. If you got less than $500,000, it's the same information that is identified in these various categories below. It just appears that HHS is not requiring you to detail the various categories that are making up your general and administrative expenses so that you can report it as a single line. The same for your healthcare related expenses, again at that threshold. But if you cross that $500,000 threshold, then they want the individual numbers for each of the categories. So we can just sort of close those. We've reviewed those a bit with Mike, and we're going to get more information on what can actually go into each of these categories. But again, these are the ones that are directly attributable to the coronavirus, preparing, delivering care, and maintaining capacity. Then they're asking for, what were the general distributions and the targeted distributions that we actually received in 2020 so that we can get to the total there. And that's going to identify for us the total bucket of dollars that we're trying to justify keeping. Part of what I commented to Mike earlier today is that what I appreciate about this is that there was a point early in this process in May and June where I was fearful that they were going to require that we take each bucket of distribution and kind of spend that down and then move on to the next bucket and keep track that we weren't reporting the same dollars against one distribution and then not reporting those same dollars on a second distribution. But it does appear that they're going to allow us to take all the distributions in aggregate and then take all of our expenses and our lost revenue in aggregate and offset those in totality instead of having to track them individually. So that's a little bit of a plus. Anything that you see that's in these kind of orange categories are calculations that I'm making internally. They're not items that are going to be turned into the reporting portal at this point, but things to help us kind of keep track of where this worksheet is going. And ultimately, the goal of this is to identify what expenses we've had, what lost revenues we've had, and what our potential liability for repayment is. So those, again, are internal calculations for that. Then we get into, we'll close those distributions out. I believe you all have those numbers and that you could just drop those in rather easily. Then we start getting into the lost revenues, and this is where, again, the definition looks a little different. These are patient care revenues by payer. One portion of the documentation really reads as net revenue or net charges. Another part reads net receipts, but we'll drop in kind of your payer mix here and keep track of kind of what that distribution is. The next section is the other receipts that we've had that we're not offsetting at this, but there doesn't seem to be anything in the documentation indicating that they're directly offsetting it at this point, as much as you seem to have, when you're reporting your expenses attributable to coronavirus, you are making the statement that these are net of other funds that you've received. So if you have payroll, my interpretation of that is that if you have payroll expenses that you are directly offsetting with PPP funds, that you would not include those in your coronavirus payroll personnel related expenses, that you're having to make that net calculation separate. And then while we have our total coronavirus administrative and healthcare related expenses above, we're actually asking for the gross expenses for the system or for the entity for each of these periods as well. So moving down. Then we're looking at, these are calculations that I've put in here, so you shouldn't actually enter information here. The difference was where we're looking at the year-over-year change. We're backing out the healthcare related expenses. We're backing out potentially salaries over the 197 threshold. And then we're getting to our net year-over-year change, and then backing out the remaining provider relief funds that are available to offset lost revenues, and then our remaining provider relief funds that are not fully expended that could anticipate being repaid or carried into 2021. The last piece is, it sounds so simple on the chart and in the document from HHS of turning in personnel metrics and patient metrics and facility metrics. But as you look at the detail of that, they're asking in part for you to define information, but for personnel metrics, they want to know the number of full-time personnel. It does not appear to be an FTE count. It feels more like a body count. But what you consider full-time, what you consider part-time, there is a note there that says you need to define that for them. So how many full-time personnel did you have during that period? How many new hires and how many rehires did you have for each of the periods? The same for part-time, contract, and if there's any other personnel category, that would just go into that last section of them. But again, we're tracking all of those data elements across all of the quarters. Our patient metrics, we're looking at our in-person visits, our specific telehealth visits, the number of patients that were admitted, and the number of resident patients, which feels a bit more like a nursing home metric than for other provider types. And then lastly, our facility metrics, where we're looking at staffed beds, med-surg beds, critical care beds, and other beds that are available within the facility. So physician practice obviously isn't going to have that. This seems to be a measure of your ability to deliver care, not we're not looking at an average daily census and saying I had 2 extra beds during this period, but how many beds did I have, enough nursing staff and enough supplies and enough physical space to continue to offer care at each of these points. In some of these, I would guess if our ability to staff beds fluctuated, and Mike can certainly argue, I would think that we'd be looking at the average over that period, so because we're looking at 90-day increments. The last piece I don't think is going to apply very much, but if there were any changes in ownership, they do also ask that you document that. Again, exactly how this is going to look in the portal, my suspicion is that it's going to be this kind of document to enter things into, and really consolidating the information, having the numbers in front of you prior to launching that portal. If it's like the Medicaid portal, I would expect that it will let you start and save things and then complete the data entry at some point. But again, the sooner they will open that and let us actually see the flow and the format of that, the better. The goal is to continue to adjust and evaluate this document and how it aligns with either the FAQs or, again, if it goes as far as January, the portal when it actually opens up, so that we can help you step through things and be prepared to do that when the time comes. That's kind of my 30,000-foot view of it.
Yeah, I think the point of creating it was A, put all the inputs in one spot, but B, to have a mechanism to say what I was saying before. I'm quite petrified for you guys. We need to kind of do the calculation ahead of time and know where you stand with all pieces in. And so I think we, anyway, the point of the tool is for you to be able to have some kind of standardized methodology to get all that input down and kind of understand, as you know, what you've spent now, where you are with your lost revenues now, and then project that on out to at least the end of this year, if not the first half of next year, and determine whether or not you are going to be able to justify the entirety of the funding received. And so again, for some of y'all, I know y'all didn't get just a whole lot, and so it's not going to be that big a deal. On the other hand, there are those of you that got quite a bit, and so making sure that you're creatively thinking through where you stand ahead of time, and not just looking at it as a retrospective reporting exercise on the back end, I think is helpful. I would go so far as to say mandatory, but you know, we certainly stand ready to talk it through with any of you guys once you've taken a crack at it.
And Janie, we do have a question in the chat regarding where EIDL money is figured into this.
I would believe that in the document that we would record that here as other assistance, but because that's, and Mike, I would certainly appreciate your take as well, but because that's money that is due back, it's not grant money that we're keeping to offset those expenses directly. I would think that that money would come in kind of after the fact and that it doesn't really impact our repayment of these funds.
That's my take too. It specifically, it does not refer to it specifically in there, nor does it refer to any loan type mechanism. You know, it's not referring to the Medicare prepayment money either. And so I think the assumption is if you already have a mechanism to be forced to pay those dollars back, that they're not offsetting the PRF on this. So, which makes sense to me. Aaron, any other questions that were out there?
Nope, that's the last and only question in the chat right now.
Okay. Well, we will post this, you know, we'll send it out to everybody, post it on the website, all that kind of good stuff, or we'll send you the link to it, all that good stuff. So yeah, thank you. The next couple of webinars that we have coming up for you guys on Monday, we have been talking to several of you, the hospitals and the practices mostly, about Clover, in addition to having their Medicare Advantage plan, has a direct contracting product with Medicare that we have been talking to several of you about. They want to talk to us about as well. And so we were going to get them on the phone with us and talk to you guys Monday at noon about it. And then to be clear, you know, there's the brand new phase of general distribution that the guidance came out on in the last week or so that we distributed, and I'm sure that others have distributed those to you. But that is really for everybody, and it's a $20 billion allocation to catch up people that hadn't gotten to 2% of net revenue for baseline period, and then whatever else is left over is to be allocated after that. And so next Tuesday, we're going to get back on with you guys and kind of walk through that portal and the information required for that, and get y'all up to speed on what's to be done to get your name in the hat for those funds as well. And that would be for everybody on the call. The first one's really more for hospitals and physician practices, but the second one would be for everybody, CSBs included. I think that's it for today. I have a question. Do DBHDD payments to CSBs count as state assistance? My guess is that they're going to be considered to be patient related, but I do think we need to research that and get that back to you guys. I think that's a great question. We'll find out. I don't see any more questions. Jason, Aaron, anything else?
No, I believe that is all the questions that we have. So if you want, I'll take it from here, Mike. Thank you for attending today's webinar. Go to our website at shpllc.com/webinars. We have a whole bunch of upcoming webinars, obviously the ones you see here on your screen, as well as a few others. But thank you for your attendance, and everybody have a wonderful day.
Thank y'all. Bye.
Thanks, everyone. Bye-bye.